Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key level for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in trade yesterday, the US markets were shut on account of observance of the Labor Day. At the current juncture, if we observe S&P 500, the zone of 5,680 is the immediate hurdle for the index. Any sustainable move above the levels of 5,680 will lead to a sharp upside rally towards the mark of 5,750 on the short term, while on the downside, the zone of 5,580 will act as the immediate support. Coming to Brent oil, so Brent oil is currently trading below its short-term and long-term moving averages, which is a bearish sign. Any sustainable move below the levels of 76 will lead to a sharp correction up to the levels of 72.50 in the short term. Coming to the update regarding the dollar index, after a sharp pullback, the US dollar index closed flat on Monday. Going ahead, the 20-day EMA zone of 101.95 will act as the immediate hurdle for the index. Coming to the update regarding Nifty, so the benchmark index Nifty has extended its winning streak to 13 consecutive trading sessions, making it the longest in recent memory. However, the current chart pattern suggests that the bullish momentum is waning. Over the past two sessions, the index has opened with gap ups but has remained stuck in a narrow trading range thereafter, offering limited opportunities for intraday trading. If we see on Friday, the index was confined to a 69-point range, and on Monday it moved within just 98 points, indicating lack of strong follow-through from the bulls. Despite this, sector rotation continues to support the market at higher levels. So going ahead for Nifty, 25,200, 25,180 is likely to act as the strong support for the index. If the index slips below 25,180, the next support is placed in the zone of 25,090 levels. On the upside, if we see the zone of 25,330 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,330 will lead to a sharp upside rally towards 25,420 followed by 25,500. On the derivative front, September futures ended lower by 0.14%. The cumulative open interest of the current, next and far series has surged by 7.27%. If we see the option chain data, 25,300 strike has significant call open interest followed by 25,500 strike, and on the put side 25,200 has substantial open interest followed by the 25,000 strike. For the weekly series, the put call ratio is at 0.96, while for the September monthly series, the PCR is at 1.50. Coming to the update regarding Bank Nifty, so Bank Nifty also traded in a narrow range of 284 points on Monday, and it has formed a small body bearish candle with a minor lower shadow. The daily RSI is still trading in a sideways zone as per the RSI range shift theory. Going ahead, the zone of 51,550, 51,600 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,600 will lead to a sharp upside rally up to the levels of 52,000 followed by 52,500. While on the downside, the zone of 51,200 will act as the immediate hurdle for the index. If the index slips below the mark of 51,200, the next support is placed in the zone of 50,800. On the derivative front, the September futures ended on a flat note, and the cumulative open interest of the current, next and far series has surged by 0.29%. If we see the option chain data, 51,500 has significant call open interest followed by the 52,000 strike, and on the put side 51,200 has substantial open interest followed by 51,000 strike. Coming to the key market indicators, so in trade yesterday the volatility index has surged by nearly 5%. However, since the last couple of trading sessions it has been oscillating between 14.3 and 10.84. A clear breakout beyond this range could trigger a significant directional move in the index. So despite the index, that is Nifty, reaching a fresh all-time high, the advanced decline ratio remained flat in trade yesterday, which indicates selective stocks are participating in the current rally. Coming to the key sectors in focus, so technically Nifty IT, Nifty FMCG, Nifty Financial Services are likely to continue their outperformance in the short term. On Monday, Nifty Pharma and Nifty Healthcare witnessed profit booking after a sharp upside rally. Going ahead, they are likely to slide into a period of consolidation for the next couple of trading sessions. Coming to the FI/DI data, both FIs and DIs were net buyers to the tune of 1,735 and 356 crores respectively. That's a wrap of today's edition of the podcast. Thank you for regularly tuning in. Do tune in tomorrow for more market updates. Thank you and have a happy trading session.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.